has been such a theme all day, and I'm really excited that we've saved up a session with Google and with a leading AI and Insurtech broker for this time of day, because we'll have plenty to go over. Maybe Christina, if you could kick us off, tell us a little bit about the macro environment for AI and the kind of demand that you're seeing for AI solutions, where the biggest kind of market gaps are.
No, thank you so much, Lee. This is a really great question to tee up, and I think just if you listen to the conversations that were had all day, I think every single conversation discussed AI, even though that wasn't the topic of it. So at Google, we're kind of new in the AI space for insurance companies in particular, of course not new in AI, but it really, as I travel around the world meeting with whether it's carriers or brokers or MGAs or reinsurers, it's really looking at how do you bring value, right, more business value to the organization. And as I think about historically, on the insurance side, we heard this in a couple of conversations earlier too, as companies looked at technology, it was really around the efficiency play, like how do you do something faster, cheaper, right? And it was whether you were using technology such as RPA, whether you were outsourcing work for a nearshore or offshore center. And now really the conversations are around how do you bring business value? So how are you really growing your top line? How are you increasing revenue, growing capacity? And then on the claim side, it's like how are you reducing leakage as well? So the conversation has changed, I think, from more of a back office conversation to a front office conversation, which is really exciting.
Great. Freddie, on your end, I want to get into AI type risks later on, but yeah, how is AI coming up in conversations with your clients?
Yeah, absolutely. It's a really important question, and we look at AI in the four segments of what we just would look at as an insurance business. So distribution, risk, core business unit, and claims. And what's become kind of abundantly clear over our conversations and over our research is that claims is the first area which has had some real advancement, whether that be in the fraud detection software with companies like Shift Technologies, or in just the customer experience, both at the consumer level and at the SME level. I think the area which is most exciting is the risk level, right? What insights is AI, and AI obviously is an umbrella term, but what are the technologies under the umbrella term of AI going to allow underwriters to do? And from our point of view, and this is very much along the same lines what you were saying, it's around how do we free up the underwriter so that the underwriter can concentrate on writing complex risks? And from a broker point of view, how do we free up the brokers to work on client solutions rather than the tedious everyday boardroom management, for example. So some of the areas we're seeing a lot of traction at the moment is around that automation piece. Now there's a bit of an argument around whether automation is AI. Some automation is, some automation isn't. But it's all around can we make things quicker, faster, and more efficient? And can we utilize unstructured data into the submissions, into the risk underwriting? So I think that's where we are at the moment. And then the next step is, well, how can we utilize those insights to produce better loss ratios? And I think we're not there yet. We haven't seen huge examples, especially at the complex risk level, where this is being utilized. But it is very much the next step, and it's, I think, a very exciting one we're about to take.
You both just mentioned reducing fraud, among a bunch of other things, and the way that that AI is being used to identify and reduce fraud. At the same time, we know that cyber criminals are using AI and are using ChatGPT to write more sophisticated, more targeted phishing campaigns to just become much more efficient at doing fraud. So like, which of those dynamics is winning out? Is it an arms race where insurers and brokers and risk managers are trying to keep up with the increase in fraud that we're seeing from AI? And yeah, maybe they're broader takeaways from that, but who's winning?
I think... I wouldn't know, but I can tell you what we're trying to do and what we're seeing. So Gallagher Bassett, the claim side of the Gallagher business, has brought out a phone sentiment AI tool, which allows us to monitor the pace of someone's voice and whether they sound distressed or not, and then use that within our conversations to see, is everything all right, or something's not right, or we can use that to analyze it. I think what we're also seeing on the Insurtech side is we're seeing very targeted uses of technology to target very specific uses of fraud. So an example would be there's a company called Indemni, which works in the cargo space, which has identified the fact that freight carriers are turning up to warehouses with fake invoices and going off with vans full of Apple tech. And so what they've done is they've just produced a piece of technology which verifies the driver ID, verifies the cargo, and verifies the vehicle. It's not revolutionizing technology, it's just simple and well done, and they're able to lower the amount of incidents they've already seen at each warehouse. So sometimes it doesn't have to be overly complicated technology, it's just very simple, but deployed every single time is key. So, every time there's a new advancement, the criminals are going to get more targeted, but it's, we have solutions for it, we just need to make sure they're used.
Yeah, and to Freddie's point, if I can follow up on that as well, I mean, that's also typically the first use case that we hear from when we're talking to a customer on the claim side, right? It's the fraud detection, right, and the fraud analytics. And to your point, it's how are you leveraging maybe existing technology that's in the market and repurposing it for insurance. So for the image, the deep fake detections, right, or duplicate images. If you think about, I'll use a simple personal lines example. I have a Honda Accord and I crash it and I take a picture of it and I send it to my carrier. How do you know that that's actually my car? Because for the most part, we're doing stuff digitally now. You're not having a claim adjuster come out. How do you detect that that picture was a duplicate from somewhere else and I didn't save it from Facebook from 6 months ago? And so, for instance, for Google, one thing that we've done, it comes from YouTube technology. And so one of the cool things is several years ago, YouTube was sued by Viacom for copyright infringement. And one of the settlement actions was that YouTube had to detect if an image was fraudulent within the first frame. And so if you upload Cinderella to YouTube, it'll say that it's not your movie, right? So that's used by carriers now that are using our technology to say, well, this image of an auto actually showed up on Facebook 6 months ago in New Zealand, and so it's not actually Christina's car. And so it's how you're taking kind of some of the technology that's out there and repurposing it, but definitely for the fraud analytics, the other key one is the sentiment analysis, which is really big right now. You think about liability claims, how are you kind of detecting if they're going to get escalated or not so that the claims team can decide whether or not they want to try to settle or negotiate, kind of what's the plan of action. And then actually one of the other interesting use cases I've seen is around actual language. So people tend to lie better in a foreign language, right? So if somebody calls and their native language is not English, it's easier for them to lie in English because it's already filtered, right? Versus if I speak French as an example. So being able to detect, allowing somebody to speak their own language, for instance, if they call in for a claim, you're able to detect those signals a bit easier than if you require them to speak English. So a lot of carriers are also implementing the multilingual capability so that people can speak their native language when they're calling in for a claim, and you're able to pick up on those language cues much more easily.
That's interesting. It reminded me of an email we got last week at Gallagher, which was basically said, this Chatham House, it basically said, if Pat Gallagher calls you and asks for money, it's almost certainly a fake, which I think is a good rule to live by as our president and CEO. And
shouldn't be asking
just FYI. But yeah, those things still need to be said.
Yeah.
No, absolutely. Totally fascinating examples. I guess looking beyond fraud, what are the tools that you're developing now to meet, like what do you expect to be rolling out in the next couple of years in terms of meeting client demand for AI risk?
Well, I can't divulge, Google's trade secrets, but what carriers are really interested in right now, and kind of going back to some of the earlier conversations, is around climate risk and how do you really precisely understand that risk and be able to price it appropriately. And so for us, if you think about WeatherNext, WeatherGen, being able to predict hurricane patterns and so forth, and a variety of other perils as well. That's a big, not just for an insurance company, but kind of the broader ecosystem, disaster recovery teams, et cetera. That's really big. And then looking at different ways that drone technology and robotics is being used, especially whether that's doing kind of the risk assessment process, kind of a pre-underwriting screen, or to handle claims might be in a dangerous location. And so that technology as well, how can it evolve more to support the insurance process and various factors?
Great. So that's all been about sort of, some of that's been about operations within insurance companies. I'm curious about liability and some of the AI liabilities that we're seeing develop, partly because I think that's a really nascent space. I mean, we've seen some insurance carriers use ISO language to try and limit some of their exposure to being sued over when your chatbot goes crazy and gives your customer the wrong advice, or even when some of your AI robotics, like when there's a factory related to them. But I think it's still very early days in terms of understanding where does that liability sit. Yeah, Freddie, how are you helping clients manage their AI liabilities, and when do you think, will it be another kind of cyber where there have to be big carve-outs and exclusions before the industry can slowly start to build up some exposure, or how will it play out?
Yeah, it's a fascinating question, and the answer is we don't know, but we are assessing it and trying to position ourselves at Gallagher to help our clients manage it. So, AI liability, third-party liability is if you, as a user of a usually large language model internally at your business, take advice from that, give that to a customer, they come back and take you to court over that advice. Where does that land? And at the moment, it's unclear. Some people say it might be caught in your cyber, or more likely it's going to be caught in your liability policy. But we're not having affirmative cover. We are starting to see some companies say, do you know what, actually, yes, we do cover that within our liability policy. And as soon as people start saying we cover that, you've then got to make a decision internally, are you pricing for that risk? And if you aren't pricing, well, there probably is a risk, and therefore you should be pricing it, and is there a gap in the market? And what we're starting to see is companies such as our Miller AI and Testudo AI are coming into the market and saying, look, this is not being priced properly, this is not being, we do not have wordings which answer that question, and here are answers to that. So I think as you alluded to, Lee, there is a various exclusion coming out 1st of January, which is excluding AI third-party liability. Munich Re have a product in the market which is trying to deal with this. And at the moment, the question is, well, how do you underwrite this? Is it in a traditional way? Do you look at the lawsuits? Do you try and get a frequency severity? Or do you actually plug into people's AI systems and stress test that? For what we're trying to do, and when we're talking to our clients, especially in London where I'm based, is do you know what your silent AI exposure is, and are you taking steps to either quantify that or mitigate those risks? So especially in the past month, this topic seems to have exploded, and it's really interesting. And we at Gallagher Re, one of the leading cyber insurance brokers, we've started a task force just looking at this one topic and trying to help customers and clients understand what they can be doing about it. But I think step one is, quantify it. And if you're quantifying it, are you pricing for it? I think it's a really interesting question, which is going to come to the fore in the next 6 months.
Is Google helping to, identify exposure to AI-related liabilities or AI-related risks from the use of chatbots, for instance?
Not directly. I mean, we really work with, it comes up in every conversation, and usually our customers are working with a PwC, a McKinsey, or some other organization that's helping them through this. I can tell you every company that we're working with has a governance committee that's having those discussions right now, looking at what are the controls that they have in place, also have human in the loop as well in the process, so that it's not kind of AI making decisions. And of course, there's also those conversations that we have with regulators to show what our technology is, how it works, to help them be educated on the process as well. But direct consulting on what your risks are, no, we don't do that.
Yeah. And then I guess, Freddie, just back to your point that this is something you're exploring and you're working with the task force on it, but it's still kind of early days for identifying those risks. I mean, is there a risk that it becomes a reputational issue for the insurance industry, where folks within the industry might know that that policy doesn't obviously cover AI, but businesses might be surprised to find that that's something that's excluded if they face a big AI-related claim?
Yeah, I think that's an issue with every sort of insurance policy, right? Is when someone reads it with from a layman's point of view, they're going to kind of misunderstand or misconstrue clauses, and that happens at the very bottom at consumer and still happens on complex reinsurance treaty. I think for this point, it's, underwriters are going to have to make a decision whether to affirmatively cover it when we start seeing exclusions come out. Because when exclusions come out, brokers are going to say, are you excluding this or not? Now, we're in a softer market, and in softer markets, in your negotiation, things like, well, you probably should now be including this. Those sorts of conversations are probably going to start appearing. But I think it's very useful that we've got these startups and we've got traditional carriers like Munich saying, this is how we're quantifying it, here is a product. And on the Gallagher retail side, we are seeing clients asking for this sort of cover, saying we are employing our chatbots to do a large amount of our work, and we're relying on their output. And if we are, so are our customers, and we want to mitigate that risk.
And you mentioned Testudo, and there are a couple other startups that have come into the space. I guess the other piece is you need the carriers to be able to underwrite the risk, and then you need the balance sheet to be able to back it. Are there balance sheets right now that are big enough to face some of the potential claims? I mean, Anthropic saw, what, a $1.5 billion, damages payment that they're facing. When you have claims ranging into the billions, like, is there insurance capacity to meet that kind of demand?
That's a great question. I mean, who knows? I would love to be the person who takes that risk to market, because if you manage to place it, that'd be very good from a broker point of view. But we've taken one of these startups to market, and I've been really pleased with the response from the Lloyd's market, which is where we're placing the risk, in that a lot of people have been very open about wanting to take this on their balance sheet. We've raised all the capacity we need, and we'll be launching in January. And even the people who said no still wanted to understand it and still kind of said, yeah, we see this as a risk. And usually that would follow up by you're also writing it in your PI book. But we're very much looking at the users of LMM models. We're not looking at the creators of those, like Anthropic.
Christina, just to go back to the way you're using AI to model risks like climate change and property risks, I feel like I hear such different things about that market. I mean, on one hand, like AI, catastrophe modeling is like very compute intensive. Like, to run these models of the entire world's weather system is incredibly like energy intensive, and maybe only a select few players are big enough to run those models in a really sophisticated way. On the other hand, obviously every property insurer and risk modeler that I speak to believes they've built the best team of meteorologists and sort of has the edge. So, like, beyond Google, who has the edge? Is there a geopolitical race between the US and China to come up with the best catastrophe models? I mean, how commoditized is that versus, because it's something everyone has an interest in trying to model, versus like, what edge do you have given the AI capabilities that you bring?
So I think there's the traditional kind of weather modeling technology that's out there that's a very physics-driven, data-intensive process. And then now when you look at the newer processes, they're actually quite light and agile. So for us to run the CAT modeling for a hurricane is like 1 TPU, which isn't a lot of energy. So if you think about the energy consumption that's used now for some of that processing, because of the technology that's there, it's much lighter than it was traditionally. So now the power to kind of own that capability or harness it for your underwriting is much more affordable, right? And much more democratized than it was in the past. Similar to all technology, right? It just becomes more readily available as the technology improves. So I don't know about what China's doing right now. I can't go into that, but definitely I think it's when there's a lot of people in this room, carriers around the world who are tapping into that capability because it is a more easily obtainable asset. And I'll just use an example. I mean, probably how many people in here use Google Maps right now or know that it exists, right? I mean, it's a free tool. It's not something that we're charging people to use. Or if you think about, YouTube, most people are using it for free and they're not using the subscription version. So the technology out there is global, it's compliant. We have a lot of carriers who tell us that they're using, for instance, Google Maps to zone in on a property to look at the tree lines around it, et cetera, and they're not paying the licensing fees for it. So I appreciate those who are paying the licensing fees for it for commercial use. But that's just one example. And if you go into, for instance, a Google search, you can look and track a hurricane pattern right now on your own, and you're not charged for that either. So the technology's there, and it's much more democratized in the cost. Of course, from a commercial perspective, when you're using it when you're business, there's additional capabilities and data points that are available that are for a fee, but it's much more easier to tap into.
I think what's going to be really interesting is the day when information like that off Google Maps or off one of the other companies which is doing the satellite geospatial imagery can be automatically pulled into the underwriting box when people put address in. Like, that would be amazing. Yeah. So they don't have to go on Google Maps and say, look, they got the vegetation there. Like, how do you pull in that data which is already available and then price accordingly with that. And so, Moody's acquisition of Cape Analytics and other acquisitions like that, I think are trying to make that information available to underwriters, I think is only going to help, especially as you roll up to a treaty reinsurance point of view. Being able to get that deep level of understanding at the base insurance level is going to be so important.
Yeah, and exactly. And to that point, many carriers are using the APIs to pull in Google Maps directly into their underwriting platform. So there's the kind of the free version, and then people are using it, and Cape Analytics is one of our partners too. Yeah. So we're kind of already there.
Oh, nice.
Yeah.
Not planned. Yeah, look at that.
Not planned, but yeah.
In a couple minutes, I want to open it up for questions. But Freddie, you work with Insurtechs. Are you seeing newer entrants use AI in different ways that tell us something about how the big traditional carriers might deploy them?
Yeah, it's we just published our latest report last week, and 74% of Insurtechs who raised funds in Q3 were AI-related Insurtechs. That's up from 25% almost a year and a half ago now. That tells me one thing, which is Insurtechs have realized from a valuation point of view, it's really useful to say that you utilize AI and it gets the investors really worked up, which is great. But so I do take it with a bit of a pinch of salt, but it is now seems to be the dominant form of technology for innovation. And I think it's a really good thing. We have clients running pilots the whole time, whether it's on the geospatial stuff, whether it's on exposure management tools within credit and specialty reinsurance. We've got pilots for little gadgets to put in cars so that people can't hack them and drive away with them. So we've got a whole range of Insurtechs all trying to solve little issues, and pilots are running all over the place. So I've been really pleased with how open insurers and reinsurers have been with partnering with these Insurtechs on pilot basis. But we're seeing a really good amount of investment, 1.1 billion every quarter into the Insurtechs. But we were saying before we came on stage that Google, and correct me if I'm wrong, Google have done, or Alphabet have done 80 billion in AI this year.
Or 90 billion in data infrastructure, so data centers. I know it came up earlier with Aon talking about that. Yeah.
And since 2012, Insurtech has done 60 billion. So we might be doing what seems like a very large number, but we are well behind the annual spend of these big companies. And so, I would say to everyone in this room, do take advantage of Insurtechs. They are very open to partner with you. They're very open to run pilots with you. And a lot of them have some really interesting insights which are going to help you underwrite risk.
What about the impact on jobs? We talked all day about how it's going to make much of the insurance value chain more efficient. But if one underwriter can do more and be more productive, that'll allow insurers to do more business, but presumably at some point it also impacts the number of employees they have. How do you think the sector will adapt to that? Will it lead to sort of jobs shrinking overall?
I think I can't comment on the job losses, but I can tell you what Gallagher Re are doing about it, which is we see the AI help as a huge way of freeing up brokers' time to spend on clients. So at the moment, as a junior broker, you're spending a lot of time managing, and I'm sure a lot of you will nod your heads and know what I'm talking about. You're helping manage the accounts, you're sending emails, you're organizing meetings, you're making sure the data has the right headings and the columns are correct, and that the postcodes in the UK and the treaty and the postcodes from the US all match up, and that New York is spelled correctly. You're doing all of that when really you shouldn't be. You should be talking to the client, understanding what they need. And so we see in the next few years, and we've just launched our workbench, which is based on some of the underlying AI technologies we've spoken about, to help everyone maximize the amount of time they're working on accretive work for the client. And that's what we're aiming to do. And I know on the underwriting it's the same. How do you make everyone spend more time underwriting on complex risks rather than worrying about kind of the day-to-day as well?
And I think, Ivy brought up a good point earlier today about what was really the job of an underwriter, kind of a junior underwriter early on, and it's making copies, or like you said, formatting, Excel spreadsheets, et cetera. And so now when we see, companies looking at how to incorporate AI into their workflows and really looking at the junior talent and their ability to actually create agents, right? Usually people a little bit more senior may not have the patience or the ability to do a no-code, low-code agent, but now it's quite easy to make your own agents. and kind of leveraging some of that junior talent to be able to understand the business process enough to design an agent to do that workflow. So you're actually learning on the job and being mentored as well in that process and creating code that can be able to do so. And you can do that without being a programmer these days, which is kind of cool.
Yeah.
I think that will terrify some senior brokers.
Yeah. Do we have questions from the audience? Great, lots. John up here.
Looking out 5 years, who will be more impacted by AI, the risk taker, insurer, reinsurer, or the broker? And for your answer, how big will the impact be?
So it's a great question I think we're all grappling with, right? I mean, for someone whose job title says, Insurtech at Gallagher Re, I actually spend very little amount of time on our internal stuff. It's mostly with clients. I think what I'm most excited about, and the impact I think it's going to be great, is that accessing of the unstructured data we currently don't access for underwriting and pricing. And that is going to be reliant on brokers getting their house in order to access all of that information we hold, and then underwriters building workbenches or data flows, whether they build it themselves or partner with someone. And then the impact is going to be most seen in loss ratio, expense ratio. We had that brilliant panel this morning. I think it was the very first panel with 3 very senior CEOs, and they're talking about expense ratios and combined ratios being the most important things we need to go after. And being able to access unstructured data, quickly come in submissions and do the self-binding, I think is going to transform that risk part. And I think maybe 5 years might be too soon, but that's where I think it's going to have the most impact. But it's going to rely on both brokers and underwriters getting that data piece done.
So I'm going to be a little bit more provocative
You can be.
Chatham House rules. So my observation, kind of off the record, is that the brokers are much more further advanced than the insurers are. To your point, I think they're really embracing how to leverage AI to market match, to do comparative quotes. Like, they're really integrated it. And if you think about all the M&A that's happening on the broker side, and how are you pulling this portfolio together and looking at coverage across, I see the carriers being a little bit slower, to adopt. And I see, especially on the commercial side, this kind of reliance on this traditional B2B model. Like, I know Lee, she's going to help me out, right? And the reality is the brokers are becoming much more tech savvy to make sure that they're maximizing the opportunity for their customer. And a lot of the underwriters are still thinking that it's a B2B relationship business. And so I see the carrier side lagging behind a little bit from the broker side that's really leveraging the opportunity to maximize.
A question over here.
Hi, I'm Jua. I work at Fortitude. I had a quick question, and this is because we talked a lot about how, like, the positivities that AI bring and how it's going to change, like, the day-to-day job. I wanted to get your perspectives on, like, recently there's been a lot of lawsuits against, like, how AI's underwriting performance are biased in a way that for example, like State Farm, they're getting lawsuits over their underwriting practices. And how can we counteract AI bias, number one, and which largely comes from what they've already studied, which we understand bias exists in humans as well, but how can we counteract AI bias? And number two, what caution should users take as they bring or utilize AI on a day-to-day basis?
So I'll also draw on what Ivy was saying earlier as well. I mean, AI bias is reflecting human bias. And so how are we making sure that we have diverse people in the room, when you're designing your AI agents or your AI models, when the controls around it, when you're calibrating it and testing the results and making sure that the results have the output that you're looking for. So it's reflecting us. And so we want to make sure that the models that we put out there are reflecting the diversity of the risk, right? The diversity of the population and the demographics that it's supposed to represent. But that's really on us to be able to program those models or to put those parameters in place, and then to be able to put some kind of process in place to keep checking the results. Like I said, all of our customers have kind of their own AI governance panels, and they're constantly looking at the models to just keep calibrating, right? If you feel like you're getting 100% of the result that you want and don't see any outliers, you probably need to recalibrate your model, right? To make sure that you're really challenging your assumption that everything is never perfect. And so how are you going to tweak your model to make sure that you're not achieving perfection every time and that you can continue to tweak that result to continuously improve?
Yeah, I think to add about other areas, hallucinations, I think is a real issue when you're using these models or the black box pricing. What's it actually saying? Does it make sense? Can you check that? I think we've all probably in the room used Gemini or ChatGPT and had something come back and go, that just doesn't seem right. And then you check it and it goes, oh, sorry, this was a good example I thought of, not an actual example. And so kind of double checking results is really important. And something we think about quite a lot at Gallagher Re is about making sure we don't create the uninsurable group again. So we're in an industry of pooled risk. And as we get more data and we get better at underwriting, more advanced at underwriting, we need to make sure that we don't create products which exclude people who fall outside of the parameters of that black box. So, and that black box, the way we think about it is it's hallucination, it's bias, it's pricing, and it's also testing, and making sure that all of that doesn't then create a group of people that we can't insure anymore because the computer says no, and that's really important that we don't get there.
Lots more questions. Maybe right up here in front, if there's a mic. You can also just call out if you feel like it.
I just wondered what you thought of the recent MIT study, which says that 80% of companies look at AI. Only 5% ever actually get to launch point, and of that, only a fraction have actually made a profit. What are your thoughts on that?
So is that in terms of AI technology companies or all companies?
All companies.
All companies. I think, when we've looked at Gallagher from an AI point, we've looked at tons of use cases, and then we've only launched a few, right? So I think that natural funneling effect does happen. But I think part of what these new insurance products are coming out to protect against AI liability and for performance guarantee for AI models is trying to give CFOs confidence to actually go and launch these products. But I think the more, every company, every client I speak to is launching AI in some form within their company. I haven't had a conversation this year where a company said, do you know what, I actually think this is a fad. I've not had that once. Everyone is doing something.
Yeah, but I think it's important to look at for everything you should. What's the beauty of it is that it is easy to try new things now with AI. It's not like you had this waterfall effect where, years ago, if you were going to do an IT investment, it was like 5 years out and $100 million, right? You can innovate quite quickly. So it's not surprising that a lot of companies are experimenting different ways, and what works well, you adopt it. What doesn't work well, you move on. But you have that cycle that's much faster than it was in the past, and it's much less kind of skin in the game to make those investments.
I would say I think our industry is very susceptible to use some of the technologies of AI, such as large language models. There's a clear need for it within insurance and reinsurance in a way that I imagine for some other industries that there's less advancement placed on that for now.
A couple more questions, one up here.
Good afternoon. When we talk about AI, it's used as an umbrella for many different technologies and the way it's been applied in practice. So I'm wondering, from an insurer perspective, how do you see them understanding what it is available to them, just because of the wide variety of what's out there, before they get to that governance process, and how do they know what to look at, and what kind of education do you see them going through?
This may seem like a planted question, but it's not. Last year, we ran an entire survey based on that exact question. So we looked at every single underlying technology under the umbrella of AI, which came to kind of 26 different technologies, and we applied each and every one to a different area of an insurance company, and then said, how relevant is each of those. So, for example, chatbot was extremely relevant to distribution and extremely relevant to claims, and didn't really have any relevance to risk. And so that's what we produced over, and it's in our, if you Google Gallagher Re Global Insurtech report 2024, all of the information is in there. And I think what was really interesting about it is the kind of expert panel we put together had quite a lot agreed on claims heavily, quite a lot of agreement in distribution, but on risk, the spread was huge. And so what I take from that is people aren't sure what of those underlying technologies is going to be a success, but people are trying things. And so, yeah, all of that data's there, and you know, some like AI and biometrics is not really relevant to our industry, and therefore was, you know, quite, and this was property and casualty, so it was quite far down the list. But yeah, it was a really interesting study, and what we claims, I think, was the best example where it was quite clear that CFOs have a lot of confidence in what technologies to invest in. I don't know if you have a Google view or...
No, I mean, a similar viewpoint. It's kind of across the board, but the same with distribution, especially with agentic AI, kind of the next best action. Claims, underwriting, it kind of varied across the board. We do see use cases around biometrics, interesting enough. If you think about identity verification on the policy, kind of the policy application process, especially in the personal line side. So you're kind of registering for a policy, you're doing it on your phone, and then that biometric is used in the future for a claim, right? To identify that that's really you and that that's not a fraudulent claim, right? Or fraudulent person filing that claim. So we do see use cases in different ways, but it really depends on the business and what their secret sauce is and what technology is going to add that unique differentiator in the market that they're in.
I think we have time for one more question. There is one. We've covered a lot of ground. Maybe just finally, my own question, picking up on this last point about the different types of AI. With Gen AI tools in particular, which I think is sort of what a lot of people mean when they talk about AI right now, like large language models and ChatGPT type products. You've talked about hallucination. One point that comes up is it's just really hard to underwrite because they're probabilistic in their outputs, and it's, I mean, you were saying a little bit earlier, they can behave like a black box, but how do carriers approach underwriting those products given that it's very hard to model how they behave and what kinds of answers they'll spit out?
Yeah, I've seen one company which basically used ChatGPT and said to it, can you ask 50,000 questions of another ChatGPT-based product and try and break it? And then from that, they were like, well, it broke it 10 times, and therefore it's 10 times out of 50,000. And it's like, I follow that, I just don't think that's probably the right way of doing it. So what I would take from that anecdote is, I don't think people know yet. And I think it's not just skills in our industry which are going to be needed to answer that question. And I think that is what we're grappling with at the moment. And I think we need data scientists, and we need underwriters, and we need people who are experts in those technologies. You know, I'm not for a second saying I am. I'm a reinsurance broker by training. We need people who actually build these models to come in and talk about how they're built.
Wonderful. Well, really engaging session. Thank you. Maybe we leave it there.
Thank you so much, Lee.